Let's take a look at some charts from the Q2 review article on Brave New Coin. So there are a lot of charts and a lot of information in the Q2 review article. I always like to be overly cautious and include as much relevant information as I can without missing anything. We'll start with some price stuff. So if you separate out, this is the total market cap of everything, which is a flawed metric anyway, but it's useful to see trends in price. And if we separate that out by quarter, which ever since 2013 or before really, Bitcoin has had pretty distinct quarterly changes, and that's carried over to alts, and that is carried on over the past 7 years. So it's always good to look back, reflect what happened on the previous quarter. How is it different than other Q2s? How is it the same? What can we expect for Q3? That sort of thing. And if we look at the total market cap, this is the 50 and the 200 EMA. This just is a simple trend test. Are we above the 200? It's bullish. Are we bullishly crossed on the 50 and the 200 here? We are. So collectively, this picture snapshot says you expect bullish continuation over bearish reversal. One thing that gives you pause is the number of crosses we've had over the past 18 months. In general, obviously it's better if you know which direction we're going in. If there's an obvious bias in price, it's much easier to trade. When EMA is crossed like this, it's telling you what you already know, in that we're in a directionless, non-high time frame trending situation. So it's important to use that as a backdrop for decisions in Q3, at least for me. If we look at Bitcoin's price change for the different years or each quarter, Q2 has always been the best quarter historically. And this Q2 is no different at 42%, average around 240. I mean, really this outlier is bringing that average way up. But even still, the average is greater than 50%. So the Q2 trend remains intact as far as the most bullish trend we could see, the most bullish price action we can see during Q2. Q3, on the other hand, has been flat historically. There has been very little going on in the price differential realm. Even still with the 76, 86%, 68% change, all in all, it's averaged out to 5%. So I'm not really expecting much personally from Q3. There's a meme that I use to remember Q3, and that's wake me up when September ends, because Q4 is usually when we have better price movements. Q3 is more of a doldrums situation, and you can kind of see that in the averages here. Q1 is really the most bearish. It's had the most bearish quarters, but Q3 is not far behind. I guess if you count 2011, there have been 5 negative Q3s and 5 negative Q1s. So no matter way you look at this, Q1 and Q3 are not the bullish quarters. It's more so Q2 and Q4. And the averages for each year have quieted down quite a bit since, post 2013, obviously. And we're kind of in the realm of, 14 to 100%, something like that, as far as what we'd expect for the rest of the year. So I think it's not unreasonable to expect a flat or negative Q3 with a positive Q4 in the realm of 25%. Now that might be the expectation. If we look at ETH is a bit different. I think it's clearer. So Q2 has had the most positive quarters. Q1 has had the biggest positive change, mainly because of 2016 and 2017. But the past 2 years have been flat for Q1. So Q2 has done, as it's expected, extremely well. Q3, on the other hand, looks worse than BTC does in that there's never really been a super positive Q3. In general, ETH's quarters are usually positive 10% or less, positive 100%-ish, or super beyond 100%, right? Like 300, 400, 500. But the expectation for me, based on historical values the rest of the year, is ETH doesn't really do much of anything. It's kind of, there's really not enough data here to really know. It hasn't really had that many full years of trading yet, but Q4 has been the most bearish, Q3 the second most. What could possibly interrupt this is the phase 0 proof of stake transition, which will begin to lock up Ethereum and give Ethereum a job other than DeFi and lending, other than ICOs. So it remains to be seen, obviously, what will happen, but that is one monkey wrench in the works that can change things up here. Is a fundamental shift in the chain itself can shake up these historical numbers. But as it stands, all things being equal, we don't do much of anything the rest of the year on ETH. And Ripple, Ripple's kind of a sad situation. It's mainly been negative if you look at 2018, 2019, and 2020. Since the bubble of everything that is crypto, it's just been negative year over year. And it's really had just negative quarter ever since Q4 2018, just negative quarter, mildly positive, negative, barely positive. So again, Q3 I don't expect too much from Ripple, and Ripple's Q4 has been so far out of the norm as far as the bullish movements. It's hard to expect, a 200% move in Q4 based on limited data set, based on the variation of the change here. I don't really see any trend, honestly, for most of this data for Ripple. It's just kind of mostly mildly negative with 3 or 4 extremely bullish quarters. If we compare Bitcoin and ETH to the rest of the world markets, NASDAQ, S&P, commodities, oil, gold, Dow Jones, Nikkei, that sort of thing, you can see ETH and BTC are at the top here. This is a 1-year chart, so change over the past year. You can see that both BTC and ETH kind of dipped into the legacy stuff when all the corona news and reality started to set in on March 12th when everything around the world started dumping. But obviously it didn't go negative like oil, didn't go to zero, BTC and ETH. Even the recovery for NASDAQ, S&P, as impressive as they've been over the past year, Bitcoin and Ethereum have still outperformed. NASDAQ in the blue here outperformed gold. Gold's had a great year. So it's always something to consider. We talk a lot about opportunity costs between alts and Bitcoin, or alts and cash, or alts and other alts, or Bitcoin and cash. And I think some people lose sight of just how crazy these crypto markets are in the volatility realm, certainly, but they're consistently outperforming legacy assets and indices. Another big story this quarter was the VIX. The VIX is a volatility index of traditional markets, and anytime the VIX has been elevated beyond 30 or 40, it's been a really good opportunity buy the dip sort of situation for BTC. ETH as well, maybe to a lesser degree. But if you look at the 2019 drop in price, obviously correlated pretty decently with the VIX. The March 12th drop in price correlated with the rise in VIX, So it's just an important tool to pay attention to. If the VIX is above 40, you're probably not going to be too bullish on crypto in general. As much as we like to think we're non-correlated over time, which we are. In certain situations, since January, we're highly correlated. This is the SPX correlation, 30-day rolling. This is NASDAQ 30-day rolling correlation with BTC. And you can see only recently we went negative on the correlation. So NASDAQ has outperformed BTC over the past month probably. But from January to June, the correlation was extremely high. And the same thing with ETH, correlation with SPX and NASDAQ extremely high until recently when that correlation went to zero. Moving on to stablecoins, really it's all about USDT on Ethereum as far as on-chain considerations. They're leading in circulating supply, leading in daily active addresses, and leading in daily transactions. Really, it's just a complete blowout. And unlike a lot of these other charts that I compare assets to each other, these are probably the most accurate in reality, in that this might look absurd that ETH USDT has this many more daily active addresses than USDT on Tron or Omni, but to me that seems very plausible with the rise in popularity of ERC20 USDT. And Omni USDT looks just about dead from the on-chain perspective. It's below even DAI here on active addresses and daily transactions. And everything else kind of takes a backseat to USDT ERC20. The least convincing is probably the Tron USDT data, because Tron is just infamously known for embellishing everything they can on-chain. So I don't really know what's going on there. But these ERC20 transactions aren't cheap, which is another reason why seeing this data is super convincing, because it's not free to send, and it's actually really expensive right now. So you can see despite a field of many stablecoins, it's all about the USDT. And USDT daily trading volume is just on another planet compared to everything else. I almost decided to like truncate this a little bit to like not make it look as ridiculous, but the reality is USDT is just dominating everything else, every competitor as far as the trading volume. So this just says the base pairs for crypto in general rely heavily on USDT, which is certainly a weakness for the market should USDT explode at some point in time. But where it stands right now, USDT really doesn't have any competition at the end of the day. And if we look at USD prices, which is the red line here, versus BTC price, the white in the bottom here. If we look at what's happened through Q2, you can see that ever since the March drop, Tether was above $1, which is what you'd expect, because you expect people to flee to safety when prices drop. So you expect a premium or a demand on Tether. So there's this demand on Tether ever since March 12th. Demand. And all the while we're rising in BTC price. And then all of a sudden that Tether demand drops off, and we start to drop below $1, which is this yellow fill here. As Tether drops below $1, BTC price also flattens out. Bullish rally stalls. So the question I immediately think of is there a correlation here worth paying attention to? Are we just bearish when USDT is below $1? Are we bullish when we're above $1? I don't think it's that clear cut. I think the change in where USDT/USD sits on the dollar market rate is the important part, because we were actually pretty bullish when USDT was below $1 here, and we're also bullish when it's above $1. So I think the actual price is less important than the change in the trend of USDT/USD. If it starts going below $1 after being distinctly above $1, that might be worth paying attention to. Looking at some on-chain stuff, this is BTC transactions per day in the line, daily active addresses in the fill, and active addresses and transactions per day are certainly up since mid-March and April, especially active addresses. Not as strong as ETH or some of these other chains, but still on the rise. And ETH is kind of on its own orbit here, its own planet, its own ant farm from everything else, in that transactions per day are just skyrocketing since March. Active addresses skyrocketing since March. A lot of this has to do with DeFi, yield farming, highly speculative stuff, which I didn't include any of in the review here. But there's a lot of froth and FOMO from people trying to get a return, a yield, interest on holdings, what many people deem as free money, that sort of thing. Super dangerous, because as those dominoes start to fall, they all fall down. So it's interesting to see that market cap grow just in DeFi in general, and to see, really the big thing is what happens when stuff goes wrong, because we know what happens when there's FOMO and froth and everybody's getting 500% yield on something, but when things get hacked, or when there's more DAI in compound than in circulation, what's the correction there? How does the market respond to that? That's the important part for me. But ETH on-chain activity is just skyrocketed since March. This is Tezos. Again, transactions, daily active addresses, also extremely strong since January. Kind of flattened out in Q2, but still up since April. And this is Link, just continues its run of a rise in active addresses since January 2019, and that's reflected pretty well in price. Just hasn't really retraced in any manner. It just refuses to drop. Transactions per day have certainly flattened out, and I forget the reason. I think it's a scaling fix. There's something that I can't remember why these dropped so heavily, but something fundamentally changed, I think, in the way one of the oracles was working or something, and that's what we're seeing here. But we had this rise again since March in transactions, modest. And then lastly, just looking at hash rate and difficulty, BTC's having happened this quarter, kind of buried in the article there, but a very important time for BTC, obviously, as inflation drops to 1.8%, and you're seeing a extreme volatility in hash rate and difficulty here, a reflection of miners becoming unprofitable, new miners being put online, price volatility, rainy season with electricity costs changing in China. All this stuff is going to affect hash rate. So we actually did hit an all-time high in Q2 as far as hash rate is concerned. Difficulty was slightly higher in March. Considering the possibility of a mining death spiral where price continues to drop, miners become unprofitable, hash rate drops off, and the network becomes unsecure, we've avoided that thus far. So from that perspective, extremely bullish. And lastly, just looking at Ethereum's hash rate and difficulty continues to rise since January slightly. Now they're switching to proof of stake eventually, like I mentioned, so they're going to continue to disincentivize proof of work mining with decreases in inflation. The issue here is miners and ASIC chip manufacturers are fighting the profitability angle, but they're seeing a rise in ETH price. They're seeing fees on ETH become insane considering where they have been. So it's actually profitable to a high regard compared to where it was, despite knowing you're going to get killed off soon. You know, you're the asteroid, you're the dinosaur, and you know an asteroid's coming. So the question is, what do? Do you just make hay while the sun is shining, or do you avoid it at all costs? And I think some miners are certainly turning their rigs back on, or rigs are being rented to mine Ethereum, maybe even GPUs and CPUs here. So all in all, Q2 shaped up to expectations, despite Corona worldwide, despite legacy volatility. I always say that if I'm on a deserted island, just show me a chart. I don't need to see news. I don't need to see technical or fundamentals. Just show me technicals, because if I know technicals, it'll give me a roadmap, at least an almanac for potential future price action.